SMX, Security Matters PLC, is currently trading at $15.58 USD, down by $1.42 or 8.35% during today's session as the market processes a significant disconnect between recent corporate updates and the actual capital flow on the tape. If you look at the charts today, you will see a classic example of a company attempting to control its narrative while the underlying mechanics of the equity market exert a much harsher reality. While the company recently announced a series of strategic moves, including its collaboration with TruCotton and a fully financed status through the first quarter of 2027, the price action suggests that participants are far more concerned about the structural integrity of the shares than the promising nature of the technology itself. This creates a curiosity loop for any serious person looking at online investment right now. Why would a company that claims to be fully funded for over a year see its stock price slide by nearly 10% in a single day? The answer lies in the gap between what management says is happening and what the institutional desks at places like Interactive Brokers are actually seeing in the order flow. The expectation that many people have when they look at SMX, Security Matters PLC, is that this is a typical high-growth technology play in the circular economy space. The narrative is strong. They have a way to mark physical materials at a molecular level so you can track them forever. It sounds like the kind of thing that would make Nvidia stock or Apple stock investors take notice if it were applied to high-end hardware supply chains. However, the reality is that the market is currently treating SMX as a distressed balance sheet exercise rather than a growth story. Even as they talk about new standards for cotton fiber traceability, the daily volume and the persistent selling pressure indicate that older baggage, specifically related to past note conversions and the lingering effects of share consolidations, is still being liquidated. When you use a Fidelity trading platform or check your Robinhood investments, it's easy to get caught up in the press releases, but the tape does not lie. Today's movement is a continuation of a pattern where good news is being used as liquidity for existing holders to exit their positions. If you are managing an individual brokerage account, you have to look at the institutional activity here. We're seeing a lack of significant block buying despite the company reaching what it calls an infrastructure-ready phase. Usually, when a micro-cap technology firm secures its funding through the next 5 quarters, you see a floor established. Instead, SMX is breaking through support levels. This suggests that the market is questioning the quality of that financing or anticipating that the conversion of debt into equity will continue to dilute the current float. It's a tough spot for people doing self-investing because the technology really does solve a massive problem: how to prove where a recycled material actually came from. But in the world of online investing, a great product does not always mean a great stock. Right now, the reality of the capital structure is winning the fight against the expectation of technological adoption. The recent movement has been particularly aggressive. Over the last few sessions, we have seen a series of lower highs and lower lows, even as the company released updates about its Kraken partnership for treasury management. Using a SoFi trading platform to track these swings shows that the volatility is not just random noise, it's a direct response to the market trying to find where the real value lies after the massive 2025 run-up. Investors who were used to the 4,000% gains of the previous year are now facing a sobering correction. This is where investment help becomes critical because understanding the difference between a momentum trade and a long-term hold is what separates successful people from those who just follow the hype on investing sites. Let's look at what the business actually does to understand why there is still interest here. SMX, Security Matters PLC, focuses on what they call a physical-to-digital link. They take a chemical marker, which is invisible and does not change the material, and they put it into things like plastic, gold, or cotton. This marker can then be read by a proprietary scanner at any point in the supply chain. It's a way to turn a piece of raw material into a digital twin that carries its own history. This is why organizations like the DMCC in Dubai or major fashion brands are interested. They need to prove that their sustainable cotton is actually sustainable. If you're using the Fidelity mobile app to research the industrial machinery and business services sector, you will find that almost no one else is doing this at this specific molecular level. Most competitors use tags or QR codes, which can be removed or faked. SMX makes the proof part of the material itself. The current business model is shifting from small pilots to what they hope will be a horizontal infrastructure layer. They're trying to position their plastic cycle token as a way to trade those verified recycling credits. This is where the Kraken partnership fits in. By setting up institutional-grade custody and treasury rails, they're preparing for a world where these tokens are traded like any other asset. But again, the market is skeptical. When you look at the interactive broker's fees and the complexity of these trades, it's clear that we're still in the very early stages. The transition from a cool idea to a revenue-generating infrastructure is the hardest part for any small company to navigate. I want to hear from you on this because the community sentiment is often a leading indicator for these low-float stocks. Comment below how many shares of SMX you currently hold and whether you're buying this dip or waiting for more clarity on the balance sheet. Your perspective on these smaller moves helps everyone get a better sense of the retail appetite. Looking toward the future, the outlook for SMX, Security Matters PLC, is entirely dependent on whether they can turn these partnerships into contracted deployments that actually show up on the income statement. We have seen plenty of press releases about collaborations with TruCotton and others, but the market is waiting for the first quarterly report that shows a significant jump in service revenue. If they can prove that brands are willing to pay a premium for this level of verification, the stock could easily decouple from its current downward trend. However, the risk of further dilution remains the primary concern for anyone using Fidelity Investments or SoFi stocks to build a position. The reality is that until the share count stabilizes and the company moves away from its reliance on convertible notes, every rally will likely be met with selling pressure from institutional creditors. The sector momentum is also a factor. While Tesla stock or the broader tech sector might be moving on interest rate expectations, SMX is much more sensitive to specific regulatory shifts. If the government passes stricter laws on recycled content verification, SMX is one of the only players ready to provide that data. This is the regulatory-grade play that management keeps talking about. But legislation moves slowly, and a company that is fully financed only until early 2027 has a limited window to wait for the world to catch up to its technology. If you're evaluating this through Fidelity IRAs or a long-term investment, you have to weigh the high potential of the tech against the documented history of the stock's volatility. The technicals show that the shares are currently trading well below their long-term moving averages, which often indicates a broken chart that needs months of consolidation before a real move can happen. For those using a Robinhood app for quick trades, this volatility is a dream, but for those seeking a stable, intelligent portfolio, it's a warning sign. The contrast between the professional, authoritative tone of the company's recent fully financed announcement and the 8% drop we're seeing right now is the core of the SMX story. Management is building for a future where every material has an identity, but the market is trading the present where the company still needs to prove it can survive without constant capital raises. The reality of the tape is that investors are demanding more than just a good story. They want to see a clear path to profitability that does not involve more reverse splits or debt conversions. In summary, SMX Security Matters PLC is a classic battleground stock. On one side, you have the expectation of a world-changing verification layer that could redefine how we trade physical goods, backed by strategic partnerships and a clear technology lead. On the other, you have the reality of a punishing market that has seen this stock drop from much higher levels and is currently skeptical of the latest funding claims. Today's price of $15.58 reflects that skepticism. Whether you're using Fidelity Brokerage, Interactive Brokers, or SoFi Invest, the key will be watching the next 2 quarters of filings to see if the fully financed claim holds up without further dilution. The gap between expectation and reality is wide here, and until it closes, the volatility will likely remain the only certainty.